Welcome back. You are with the Impact Summit here at the Singapore Fintech Festival Global Common Channel. I'm Manisha Tank. It's great to have you along with me for the coming hours. We move now to the public and private sector response to the global recovery in 2021. Of course, this being a big talking point at the festival this year. To understand how collaboration and rollout of support works, we have a great panel lined up for you. Charlotte Crosswell, Chief Executive Officer of Innovate Finance, will be talking to Mike Wells, a Group Chief Executive of Prudential, Jess Staley, who is the Group Chief Executive of Barclays, and John Glen, the United Kingdom's Economic Secretary to the Treasury and City Minister. So let's go over to Charlotte for the conversation.
And hello and welcome back. My name is Charlotte Crosswell. I'm Chief Executive of Innovate Finance, and I'm delighted to be moderating this session on navigating the storm, leadership lessons for 2021. It'd be interesting to see what would have happened if we'd done this a year ago. And what a great lineup of speakers we have today to join us. Firstly, John Glen, the Economic Secretary to the Treasury, Jess Staley, Group Chief Executive of Barclays, and Mike Wells, Group CEO and Executive Director of Prudential. Thank you all for joining us today. So we're going to go crack straight in. I think it's a wide agenda, and I know that a lot of people are very interested in hearing from you all. 2020, it's been a challenging year, which may be an understatement of the century. Could you just talk a little bit about how you and your organisations have approached this? Mike, perhaps if I come to you first.
Well, I think we were fortunate. We had some work, in progress, particularly around our digital health platform that we'd had about a year and a half's worth of time and capital invested in, and it was ready to go. We launched it in November of last year, so that was, in some ways, well timed. And we had just completed about 8 months earlier a global update of our technology platforms, which, I think one of the things you've seen with COVID is it favors established infrastructure, established firms, established relationships. And so, we've leaned very heavily on those. I think the other thing you've seen is a forced cultural shift by our key stakeholders. Consumers are more comfortable with digital now. Regulators and policymakers have allowed face-to-face selling on this sort of technology, and approvals that would never have happened in the timeframes they did, without COVID. And I think on the policyholder and the payer side of the health business, for example, everyone has had to move forward at pace. So there's been some positives in it, and I think that we have just managed for that. At one point, we had 95% of our employees globally at home. So it's fortunately the infrastructure was built and working, and is continues to function well.
That's amazing. Jess, Barclays, have you had an interesting year as well?
Charlie, it's great to be on this panel with Mike and John. Hello to all of our friends in Asia and Singapore. Wish we were there in person, but it's good to be here. Yeah, to think a couple quick points. One of the first things that we did, and I'm sure many other firms did, is make sure that we started to meet as a senior management team with much greater frequency. In fact, the executive committee of Barclays started to meet about 3 times a day when the pandemic really started to roll out. And we set 3 priorities out of the box for ourselves. One was to preserve the financial integrity of the bank. We can only help our customers and our clients and the countries that we operate in if we have financial strength. And so making sure that our balance sheet was strong, that we stayed very liquid, that we were managing our risks was sort of the first priority. The second priority was to work very much with the British government and with John and his team, recognizing that given the financial strength that the major banks and insurance companies had coming into this crisis versus being the catalyst for the crisis in 2008 and 2009, we have a real opportunity to partner with governments around the world, but for Barclays, notably the UK, to try to act as a vehicle to help the country recover. So by processing some 25 billion pounds of government support loans to small businesses and major employers in the country, I think we forged a partnership with the regulators and with the governments like HMT that hopefully will reflect well when people look back at the role of Barclays in this pandemic. And then thirdly, also to Mike's point, taking care of our people. We put a block on any redundancy programs for the last 6 months. All sorts of programs to allow people to take care of loved ones or kids who are having a tough time during the pandemic. But the other thing I'd say, and here in the UK, with the help of the government, whilst we had about 55,000 people working from home, and as Mike said, that technology allowed the financial industry almost en masse to send tens of thousands, not hundreds of thousands of people to work from their kitchen table. We still have 20,000 people that are going into their place of employment at Barclays. All of our, 90% of our branches stayed open, and imagine the challenge of keeping, branch managers and tellers safe in this environment, and the courage that they showed to keep all those branches open. Our call centers stayed open, and what people did there. So not only did we have to re-engineer technology and processes to allow people to work from home, but we had to re-engineer processes in our facilities to allow people who had to get into work to stay into work, so we could stay connected to our customers, but do it hopefully in a way that was safe.
And I think we brush over those things now compared to what it was like at the time. It seems very easy to talk about it now, but not back in March, of just how seamless that was. John, perhaps we can come to you. And Treasury was pretty busy. I think a lot of pressure was put on you. Let's just talk maybe about the last few months.
Yes, thanks, Charlotte, and it's great to be able to be on this panel. And obviously this has been a unique year in my experience as a minister and as a politician, but in terms of the government as well, it's been very challenging. We've spent around £280 billion in terms of trying to support consumers, businesses, public services across the UK, because this pandemic has obviously touched all areas of our national life. And I think, as Jess said, what we've been trying to do is collaborate with banks, with financial services firms to disperse those loans, the bounce-back loans, the coronavirus business interruption loans, the larger version of that. And then the Chancellor was also keen that we should try to innovate where we could to support new businesses that couldn't access finance. So we had the Future Fund, which provided 770 million of convertible loans to more than 700 institutions and businesses. And that was a challenge to get those up and running from a standing start, whilst every other department of government was obviously drawing close to the Treasury to seek additional support. But what we've also been able to do is recognise that in these difficult times, we've got to continue to innovate. And so we also commissioned Ron Khalifa to do a review of Fintech to address the challenges of ensuring that there's still an opportunity to grow and succeed as we hopefully move to recovery shortly, and to create the framework really for continued adoption of Fintech solutions and maintaining our advance in those areas. Obviously, it's really critical that we have an eye to the recovery, which is also going to help us deal with the fact that we spent £280 billion, which is obviously a responsibility of mine as the Minister responsible for the Debt Management Office in the UK.
Absolutely, and I think that you touched on economic recovery there, and obviously that's what we're all looking for now, especially with the announcement of the vaccine. John, if I can come back to you first, how can the public and private sectors drive that economic recovery? Because it's obviously not the responsibility of one or the other. It's got to be a collaborative approach.
Well, that's absolutely right. I mean, governments to me, about enabling individuals to fulfill their potential by supporting people through difficult times, but enabling them to grow. And obviously, we need to see a significant economic return when the growth to return to the economy as a whole. And that means looking to industry, looking in my area of financial services to innovation. And I think if I think about fintech in particular, it's worth 11 billion to the UK economy. It now employs 76,500 jobs, and even last year attracted 4.1 billion pounds of venture capital. And so it's really important that one of the things that's come through the crisis is the new behaviours that have been exhibited in terms of more people working from home. 6 out of 10 people now have a mobile banking app on their phone. And it's estimated that 30% of people are obviously using that significantly more. So I'm very keen that the review that we've commissioned through Ron Khalifa comes out with some really clear recommendations for government to act on. Because what we've got to do is make sure that both as a government and working with our regulator, the FCA, are in a place where we can allow more innovation and to apply the lessons. But what we really need is more collaboration. I think in terms of how vaccines have developed and have been approved swiftly in the UK, it's really important that we learn those lessons of how private sector and government can enable each other to do what they need to do. We need to protect citizens, but we also need to allow industry to develop solutions to people's challenges. And obviously, a recovery that exceeds expectations is something that I'm after as a government minister, keen to ensure that we minimise the changes to people's tax bills.
I mean, Mike, John obviously touched on health there and the vaccine. Can we just talk about obviously your work? I know in Asia that's considerable on the impact of health and how that helps drive the economic recovery.
Yeah, I think one of the lessons from COVID is a more holistic look at health and wealth and economies and how they're clearly linked, right? I think that would have been an uninteresting statement at this conference last year, right? And now I think you could talk to a school child and they would understand that the two are inseparable. From a consumer point of view, we've done a lot. There's a couple of things we've seen come out of it. There's a much more holistic demand from the consumers for health and wealth services, so they are seeing them as combined. To John's point, we're getting tremendous support with regulators and policymakers across our markets on innovation. They're very open to new technology. They're keeping up. The remote working has not affected their ability to approve. Use of, for example, the sort of telepresence, the use of apps and technology that weren't in the market. So I think the entire pace of the stakeholders has picked up, but the direction clearly is, and you'll see us do this. So we launched the health platform I mentioned earlier, Pulse. So we've to date had over 12 million downloads of it with a November launch in Asia. It's built off a UK. One of the core components of it's a UK sourced artificial intelligence doctor platform, Babylon. It's also available in the NHS, as you may be very familiar with, and people use it as a symptoms checker. So you're seeing a different type of consumer behavior on health, and it's a management of their wealth because their cost of taking a day off work or paying for that doctor or how those services are procured, delivery of the medicine now by a DD vehicle, that sort of thing. These are all things now that are becoming normal expectations of the consumer, and we're getting tremendous policyholder support. But I think you'll not see a separation again of the financial impact of health issues for individually, corporately for firms like us, or at policy levels for John and his counterparts globally. The two are very interlinked.
Jess, can you talk about that and just touch on that public-private sector? You obviously talked about the loans during the crisis, but how does that lead into economic recovery?
If you think back to the end of March, beginning of April, we were looking at a terrifying economic environment in the back of COVID-19. The spin data that we had for the UK that John and the other managers were looking at was unprecedented in terms of the collapse of GDP in the country. As I said before, the economic crisis tsunami created by pandemic 19 was really only met by an equal force in how robust the fiscal and monetary response was. And in terms of borrowing at the British government level and putting that liquidity back into the system, extending loans to small businesses and large employers, it was an amazing response, all the way to the Bank of England, whose balance sheet grew well more than twice what it was at the height of the financial crisis in 2009. And the amount of liquidity that was injected into the global financial markets, again, was just to an unprecedented level. And then Barclays, for its part, in the last 6 months, we were a lead manager underwriter on over $1 trillion worth of debt issued by sovereigns and corporates. And if you look at markets all around the world, what they are hitting almost historic highs. You had the highest appreciation in the Russell 2000, mid-cap index in the history of that index, which dates back all the way back to the 1980s. So the amount of liquidity that's been put into the system to allow economies to get back on their feet, hopefully on the back of the news that we have now in the vaccine, is very encouraging. And I think we all learned a lot of tough lessons in the last financial crisis. I think how governments and financial institutions have responded in this crisis will be a lot of good lessons that we should remind ourselves when the next crisis hits us down the road. In terms of technology, like everyone said, we've all been amazed at what we can accomplish because of what technology has done. And just like Mike said, Barclays continues to invest in our technology platforms, and partnering with Fintech is a big part of this. During the midst of this crisis, we launched what's called digital receipts. We have about 9 million users of our mobile banking app. You walk into a store, you buy something, rather than getting a paper receipt. When you make your payment, the receipt goes immediately onto your mobile app on your iPhone and is there to be used later. That was based on a technology of a fintech company called Flux. At the same time, we've also launched what we call digital loyalty, where a major user of loyalty, like one of the first ones for us was Harvey Nichols. Their loyalty card gets embedded in our mobile app, and the loyalty card program no longer actually needs a card. That was on the back of a fintech company called Bank. And so I think big firms, big banks like Barclays, as everyone has mentioned, that would probably one of the lasting benefits of a horrible pandemic will be, I think, the acceleration of digitizing finance and digitizing commerce.
And just coming back on that, on the consumer habits, and we obviously, we've heard some headlines on consumer habits and how those have changed. What are the key highlights you've seen from how you interface with your customers? Do you think those are going to stay? And perhaps what's next?
Yeah, digital commerce has basically, in a very rough measure, has gone from sort of 40% to now 60%. And I'm sure there will be some swing back. I think people like going to their local bakery store and the local flower store. But digitizing commerce has been, and the comfort level that people have gotten, even the elderly, which historically have been, less inclined to move digitally, have become, in some cases, quite fluent in how to use new technologies, and we see it just in the simple demand for cash. The amount of cash that's being required to allow the British economy to operate is a fraction of what it was before. The other interesting consumer response to the pandemic, which I think was something we didn't quite anticipate, in a normal economic downturn, consumers and small businesses tend to actually borrow a little bit more, take a little bit out of their saving account to either keep their lifestyle or keep their company invested in. In this pandemic, what clearly was the motivation for across the board consumers and small businesses was fear. And we did not expect what happened to us, which is borrowing by small businesses and consumers actually went down. In part, that was the programs rolled out by the British government, but demand for credit has gone down, whereas our deposits went up dramatically, which is why we have liquidity levels in the bank that are almost double what we've ever seen before. So the consumer has gotten very conservative. Businesses have gotten very conservative. They've got a fair high level of cash, which I think, if this vaccine works out and we start to see the end of the tunnel of the pandemic, given the financial position by and large that people are in, the recovery hopefully will surprise us all to the upside.
All those commuting costs everyone saved, maybe. Mike, can we just talk? You touched obviously on some of the work you've been doing, there. How much do you think in your world those consumer habits are there, that have taken place, are there to stay?
Well, Singapore is a perfect example. So our agency and bank distribution in Singapore, during the most conservative lockdown, went 100% telepresence as we're meeting now. Singapore has opened back up domestically, pretty effectively, and we're still 50%. And to Jess's point, it is older clients who find it safer. It is younger clients who find it, just more convenient. The use of telemedicine in pretty much every country we do business in is up dramatically. And younger consumers always liked it because they've never really understood the idea of waiting for doctor's office, until they're ready to see you and how accurate they are at scheduled appointments and that sort of thing. But the breadth of consumers across different age bands now that think that's a good first step before they go see someone in person. It's changed completely in the last 6 months. And, there's markets where that infrastructure, medical infrastructure is still quite limited, the number of doctors per 10,000 people. And it's really creating a different health paradigm that's much more efficient, much more accessible, much more democratic to people, at different income levels. So I think consumer behavior has materially shifted in this. The barriers are, the advantages are coming from technology. The barriers are technology. So we have 5G on the horizon and in some markets now, but we still have lots of consumers that, we developed some of the support for our apps back 5 generations of Android and 3, 4 plus back on Apple platforms. And that's limiting. I mean, that defines the capability you can put into the technology, but we have to serve, the economies you're in. I guess the last thing I would say is there's more people participating than ever. So when, we launched with governments, for example, the health app, and part of what they asked us in a lot of the countries was, can you help the bottom part of the economy in health inclusion, financial inclusion, by just basically giving the services away? And we've done that. And there is you're introducing people to financial and health services that they have no experience with. And in every market, it's complicated, right? To navigate a medical treatment, the billing, some markets are much more complex than others, but you've created an entire new cohort of millions of consumers into that space that weren't there before. And again, disproportionately because of COVID. So there's a lot of change, I think, in consumer behavior, certainly across Asia. And of course, we see it with our US business as well.
Yeah, no. I think we've all got stories of someone's parents who've managed to get online for something now, which is, so perhaps that's one good thing that's come out of it. John, coming back to you, and obviously you touched on the FinTech review, and I think it'd be quite useful for people just to understand why that review is taking place, and what you're hoping to get out of it. And maybe you can just touch on what Jess was saying about the access to cash, because I know that's something you've been looking at as well, and whether there's an opportunity for FinTech to be looking at that.
Yes, of course. I think what the conversation so far has revealed is that this last year has brought innovation. It's brought innovation in consumer behaviour. It's put new imperatives for businesses to respond in new ways, and a lot of that will endure. But I think what in government we've got to do is respond to that in terms of where does regulation, where does the infrastructure that supports the growth of businesses evolve to. And so the work that Ron Khalifa is taking forward is looking at exactly that, looking at the international policy context, looking at what sort of things we need to do to secure investment, how we need to get the whole listing regime in the UK in the best place to encourage more fintechs to list in the UK rather than elsewhere. And we'll also look at the relationship that we have with our regulator. And you will know, Charlotte, because you've been involved in this before, in terms of the fintech bridges. Obviously, our first one was with Singapore in 2016, and then we've had them in a number of other jurisdictions. But maybe that needs to evolve in terms of its scope as well. And so what I'm hoping is that we will actually say, look, there are some behavioural changes that we've seen in financial services and consumer behaviour. How do we as a government enable those to be fully realised, and for the innovation that we naturally see in the developed market economies that we are inhabiting, how can we actually see that they actually fall to their full potential over the coming months and years? You asked about access to cash, and Jess said about the changes in behaviours, and we've seen that accelerated enormously. My responsibility as a government minister is to ensure that cash can be accessed everywhere, because of course there are many groups of in society who do rely on cash, who are not as familiar with the new ways. And I find it in my own constituency, representing a part of rural England, there's different behaviours in terms of how we use cash there than when I'm in Westminster in Parliament. And so what we're doing is we're doing a review of wholesale distribution of cash, but also working collaboratively with the banks to say, well, now how can that distribution network be more efficient, be more cost-effective, but actually give universal coverage, which is a principle that we still need to adhere to. And there's a lot of interest in that. And again, it's complicated because it's about regulators, governments, and banks and financial services firms coming together, including fintechs, to innovate in the new opportunities that need to be taken up to provide cash in different ways. So I think that as I reflect, there's always a challenge for government, and the challenges that come out of this year are profound, but ones that we're keen to get on the front foot with, and that's what we're doing.
Yeah, great, thank you. So maybe we can just spend the last few minutes on looking forward. We've all talked about the consumer habits and how that's going to change, and a lot of those are going to be there to change, to stay. And looking at those innovations, which we could argue are well advanced, or we could argue that actually are just at the beginning. I remember saying at the end of the 90s, we will never see a decade of such technological change. So don't rely on me on predictions. But looking at innovations, looking at the future, how we can leverage private to public sector collaboration, perhaps we can spend some time just talking about the future of financial services, which is a crystal ball, perhaps, and we won't hold you to these predictions in 10 years' time. Jess, perhaps I can come to you.
Yeah, clearly we're going to move from the financial service industry being an analog industry to being a digital one. I also think the opportunity through technology, to bring consumers together with merchants and businesses in a beneficial way for both parties will be accelerated because of technology. The financial services has got a quality to it, which is finance touches almost everything that goes on around us. It touches all consumers, touches all businesses, universities, charities. And so the amount of data that is available for those that are part of the financial services and payment streams is really quite remarkable. Almost so much so that I think the big challenge is, it's not all sunshine. I think one of the big challenges where government and regulators will have to get involved, I think there's a whole new regulatory framework that needs to be considered as technology merges with finance the way it's going to over the next decade. Protecting consumers, protecting data privacy, making sure that people's information is used only for their benefit and under their approval. We're almost going to have to manage data as responsibly and as safely as we used to manage cash and someone's wealth in their in their checking account. So there'll be a whole new regulatory framework that I think will be created by this. I think to a certain extent, there'll be a blurring within the financial service industry, although I do think a lot of technology companies will try to stay somewhat removed from the regulatory framework that's been built over the last decade. But we're very excited about where we are. I think the relationships, as Mike was talking about, with regulators has gotten to a really constructive level during this pandemic. But I just look at what we can do today on a mobile phone in terms of someone managing their finances, and how we can bring consumers together with merchants in a beneficial way under a regulatory framework that I think is very much there to protect the consumer. The future is fascinating, and I wish I understood code as well as my two young daughters do. Then I'd feel much more confident in my role. But there is so much going on.
Well, hopefully that will all be done by AI, and you won't need to. But I'm with you on that one. Mike, let's turn to you. Private collaboration, public sector collaboration, or how do you see the way forward?
Yeah, it has to be both. The challenge is, and just take our major areas, health and retirement savings. They're too great for a single solution. Singapore is a great example, a very well developed health sector, very well developed pension, model at the government, but supplementals on both are key from the private sector. Personal savings are a part of that. But I think you're going to see a number of changes. So to Jess's point on regulation, in our world, in Asia, there is still, it's by country regulation. So even though, and this will define the limits of some of the capability. Let's go back to telemedicine for a second. A doctor may not be licensed across border. Who owns their medical history varies by country. And our ability to give that information, again, we don't see the actual health data, but we have the aggregated levels of it. But moving that across borders right now is, even though there's very similar concerns from the governments and their policies in addressing privacy and addressing the data, they're dissimilar rules and how it can be used and moved. And some of the efficiencies that you see with, say, some of the EU's policies, you would get that'll emerge, I think, in Asia. And there'll be some standard setters, and I think Singapore will be one of those. The other, I think you'll see products and services that we don't think of as financial services now. So, some of the Chinese insurers tried some very interesting things where, if you're late for, insuring if you're late for a meeting, insuring if your flight's late, you can get a coffee or a cocktail, right? And they are entertaining, just as laughing. I did too. I've been in the airport when the little song plays when somebody's got a drink because their flight's late, and they're sitting in a lounge where the drinks are free, and you think to yourself, like, this is borderline gambling, but okay, I got it. It's entertaining. What it really is saying, what does a consumer want? Like, what are they concerned about? Do we have capabilities? Let's assume it's actually addressable, insurable risk for a second. What do they want? And some of the things that are coming are, parental care, social challenges. All of us have dealt with employees who are locked home and are having bigger challenges than others on the isolation and the mental health strains that have come with it. I think there'll be an expectation from policymakers that we'll play a much greater role in the private sector in both wellness instead of health insurance, and also providing solutions for those sorts of care, that are more holistic and don't exist currently. And we're looking at some of that quite seriously now. But it's a blurring of individual historic products to a more individual consumer-centric holistic solution. I think that's now. That's not 5 years out. We'll be talking about specifics, I think, this time next year at this conference.
Yeah, and I presume you're seeing just an incredible change already in Asia, that perhaps we're going to be following that in Europe. I mean, everyone I talk to says the next big change is in insurance and insurtech. Do you think that's right?
I do. I think it's the consumer base, for one. You have you have a different expectation. Consumers, again, step outside of Singapore for a second. Most Asian consumers fund their own retirement and fund their own healthcare. Right. So the efficiency of that healthcare and that experience is, they have a lot of skin in the game. They're very motivated. It's also, the markets tend to have a high use of mobile technology, even at different, very low income levels in some of the sectors. So there's some of the efficiencies we've been talking about in this panel play naturally to the structural demand in the market and play naturally to the consumer preference. I think the States is interesting. We don't provide health insurance. We're one of the largest providers of health insurance in Asia. We're not in the business in the U.S. But what you've seen is a huge spike in telemedicine in the U.S. Because again, the consumers like it. It adds capacity. I have an old friend who's just about to retire as a doctor. He hated practice management when it was added by his hospital to make his checkup more efficient and things. But he now loves telepresence, talking to his clients, because he can see, he can talk to 10 an hour and make sure they're okay, and he gets a visual interaction with them that he likes much. So, again, all of the stakeholders in the health ecosystem are moving, because they've had to. And I don't think they'll ever move back to where they were, because there's no reason to. It's not particularly efficient, and it's not better care. So I think you very likely could see Asia 5 years from now have some of the most sophisticated healthcare globally, because they're not replacing something; they're generally adding. It's a bit like when countries skip a technology, right? You're getting that sort of effect in a lot of the markets we do business, and it's. And there's certainly a catalyst with COVID to, for the governments and private sectors to invest heavily in that move.
Great, thank you. And John, I'm going to finish with you for some closing remarks. But you obviously have financial services and fintech in your portfolio, so you've had a busy year, but I think you're going to have just as busy a year next year. Can you just sort of give your thoughts on the future of it, and obviously for our audience today, Singapore Fintech Festival, where you think the UK will stand in fintech?
Sure, thank you. And I think Mike and Jess have set out very clearly some excellent examples of the sort of innovation that we'll see in consumer behaviours. And if I contextualise that from the UK's point of view, I see fintech as being a core element of the future in financial services. I've talked about the review that we are doing and how we hope that will open up even more investment in the UK. But I think we've also got to be ready to see new elements coming in. I think that the imperative around net zero, the appetite of consumers to understand where investments are being made and what effect it's having on the world around them is also going to be a key driver of behaviours. And I think financial services firms and fintechs will tap into that. People want to know where their investments are going, and there's a whole challenge for all parts of financial services to come to terms with that gap between where we are now and where we need to be. I hope that we see an openness and to more collaboration. Obviously, the UK has left the European Union, and that will be about us taking new opportunities to move nimbly, working collaboratively with partners such as Singapore, and we're also excited about the free trade agreements that we're forming with other countries such as Japan, Switzerland, and the US. But what we've also got to recognise is that technology is going to be a transformative force in the way consumers operate and the way that businesses have to adapt. And that will mean new challenges for governments, how we regulate, how we enable people to take the advantages of new ideas, cryptocurrencies. If we think about where do the boundaries lie there, if we think about stable coins, we think about how tech platforms engage with financial services, to what extent that they come in within the perimeter of regulation or not. These provide some profound challenges for governments and businesses alike. But I think what we've got to do is to take an open, collaborative approach where we work across different markets and different behaviours. I was listening to Mike there, very interested to hear his correct appraisal of the responsibility that people take in different countries for paying for their own healthcare. I hope there are some lessons that we can take in the UK. But what we've got to do is be prepared to collaborate and tackle these things together, because clearly what we learned through this last year is that in a global pandemic, we have common concerns, common needs as individuals, common challenges as governments. And I think that I hope that my government and the governments across the world will work collaboratively to continue to challenge each other to solve these global problems. And I think it's in that spirit that we should tackle the opportunities that exist in financial services, and Fintech will be core to that, and I will be moving quickly in the new year to take on the review and to enact things that drive forward opportunities in the United Kingdom.
Thank you, John. And you've certainly been a big champion for the sector. I mean, I think today we've definitely heard about obviously innovation coming through from banking, from insurance, but also from government itself, and the importance of partnership, openness, collaboration. Everyone's changing and changing fast. And as you say, we didn't touch on net zero and the role of fintech and technology there, but just such an incredible opportunity for us to look at that, and especially in the road to COP26. I just wanted to say thank you so much, Economic Secretary John Glen, Jess Staley, CEO of Barclays, Mike Wells, CEO of Prudential. The cameo from Mike's cat, I have to give credit to as well. Thank you for that. Thank you so much for joining. It's been great to be at the Singapore FinTech Festival. I know we all sincerely hope we will be there in person next year, but thank you for now.
Charlotte, thank you so much for that. Yes, we completely agree. We would love to see you all in person, and we hope that's what we have in store for 2021. Great panel there and some great insights. Of course, the UK being at the forefront of much fintech solutions. And in fact, interesting to hear some of the other developments, not just around fintech, around medtech as well. This, of course, has been a huge talking point in the United Kingdom, and you heard the health service mentioned a number of times there, but also mentioning insurtech, one of the areas where you're seeing a lot of development in terms of collaboration, strengthening of the kind of technology and the platforms that are available, but also another conversation that's coming through about data and aggregation. So reflecting a lot of the themes that have been coming out over the course of the festival. Keep it right here on the Global Common channel.